We just had non-farm payroll, and the US dollar is sitting at a critical level that will affect markets next week. So I will have all the details in today's video, including the euro, the pound. We're talking about gold and silver. I've got WTI because that chart is starting to set up once again. And lastly, Bitcoin to finish up this video. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So guys, let's get into it here with the DXY, which is sitting at a critical spot here going into the weekend. So we just had non-farm payroll and the numbers came out pretty weak. Hence the reason that we are seeing the US dollar sell off here once again, coming down here into support. So like I mentioned in recent videos this week, 99.5, this area down here is going to be a critical level here for the DXY going into next week. So you can see here that off of the lows, we have this parallel channel, which back here we had these highs and we have these lows. Now at the moment, okay, if we close below here, then the lack of a retest up here, right at the top of this channel, is starting to look a little bit more significant. Simply because a lot of times when you get this kind of symmetry in a market and you get the market not testing the other side of this pattern and then breaking to the opposite side, then this up here, the lack of a retest, okay, the inability to move all the way up here toward the top of the channel does start to look more significant. So the bottom line for the DXY going into Friday's close is going to be this area again, 99.5. If we see it close below here convincingly, then that could open up downside targets for next week, which I'll talk about here in a moment. And alternatively, if we hold above here, then really this is still just a sideways market going into next week. Like I said recently too, the area just above 100, this is going to be critical as well for this market. Simply because if we go all the way out here, look at 2025, you can see where we do have this symmetry that formed. Okay, so we had this move lower in 2025. The DXY went mostly sideways for about a year, and we formed this symmetry in the form of a parallel channel off of these highs and lows. So this breakout back here, right? This is why 100 is going to be significant. Not only is it a significant level or psychological level, but also the top of this channel that so far the DXY has lost. Okay, so really for the US dollar to turn bullish, I've said this all week, this market would have to get back above here, which so far we have not done. And instead the market is just pressuring this support area down here. So if we lose 99.5 here for the DXY, I do think that this imbalance right back here, if we draw this out, okay, this area right down here below this low at 98.75, I think this is the area to watch. Okay, so I think if we break down below 99.5 today convincingly, if we just close, just below this mark, guys, that's not going to be enough for me. I would have to see something very convincing here from the DXY. But I do think if we were to break down, then this imbalance back here, this unmitigated imbalance back here is the one to watch right around 98.5. Okay, so that's what we could get here from the DXY. Again, if we close above here though, over the coming days, like if we hold above here today, and then next week we just continue to turn sideways and then get back above here on the high time frames, that would keep this rally intact. Now, one thing to note here before we move on is that even if we lose this support level and move down here toward 99.5 here, this is not necessarily, overall structurally bearish for the DXY just yet. And the reason for that is you can see that this BOS right here, okay, so on this close above, we have the BOS, this makes this down here the protected low. So really technically, when you look at this here from SMC standpoint, you've got these lows back here right around 97.65. And so that is going to be the protected low. So as long as the DXY is above these lows down here, then it could technically pull all the way back down here toward 98.5. And then from there, if we do get a bounce, this structure would still be intact, okay? It would be outside of this channel. However, in terms of break of structure, change of character, all of that good stuff, this right here, this would still be constructive for the DXY. Okay, so just something to note there that if we do get below this channel support, don't make the mistake of getting too bearish for too long here, just because overall the structure is still bullish. Okay, and in fact, if we look at this here, from the low down here, up here to the high. So let me turn on my stack template here, and you can see where the OTE area comes in, which this is where markets tend to pull back before bouncing. And you can see right here that we have basically, again, from this low down here up here to the high, the area between the 79%, 62% comes in right through here, okay? So even, again, a drop down here toward 98.5 would basically just put the market in a lower boundary here of OTE. So again, that would still be constructive overall, even if we were to lose this support level. All right, so let's move along now to the Euro USD. Okay, so let's take a look at the Euro and see how that lines up with this chart. Okay, now if you guys want to use the broker that I trust the most, then check out the link right below this for IC Markets. That is going to be a link where you can get a 100% deposit bonus up to $1,000 and then future deposit bonuses of 50% up to $25,000. So they're going to give you up to $26,000 in trading credit to trade with. So it's a no-brainer. And also if you deposit $10,000 or more into your account using my link, I will grant you lifetime access to our Discord group, which also includes the full SMC course. So check out that link below, or if you don't see it below, check out the description of this video. So with the euro, obviously mostly the opposite of the inverse of the DXY for the most part. And you can see here where last week what I was talking about there, the reason I did not short this market at all is because even though we technically had the potential for 2 bearish outside days, like I said a few times in videos, what matters with an outside day is confirmation. So with this candle here, for example, this green candle would have had to close below the low. Same thing over here, right? Today would have had to close below the low. And in both cases, we did not get that. Furthermore, if you look here from this channel, right? In order for this to become a failed breakout, we would have to close back below here. And we never did that. So this was just a case where the market was just making higher highs and higher lows, right? So nothing here to short. Now, in terms of longing this, also not too favorable because we have the top of this channel all week, okay? So the euro has been testing this all week long. You've got the highs back here. This has been a 2026 channel that this market has moved within. And so far, it's just been chopping around this area, okay? So if we get above here today, then that could open up these highs back here, right around 116.22. That is the protected high based on this downtrend. Okay, so within these impulsive and corrective moves lower, you can see where this was your BOS, this is your protected high. If we do get above here, close above this, then this starts to look a little bit more meaningful from the euro. Now, keep in mind too, that we do have an imbalance back here for this market as well. So this right here, this basically 4 candle drop, you can see that we have multiple imbalances down here, right? Or up here where the market basically just ran through this very thinly traded. And so we could come back here toward this area if we get a close above this region up here around 116.22. But right now, when you look at this on the weekly time frame, right, what you'll notice is that, again, we are starting to break above the top of this channel. Okay, so something to watch going into next week. If we close above here and can hold above this next week, okay, then we could see a pushback here toward imbalances like this from the euro. All right. So just something to watch here. We could have a short-term reversal shaping up for this market, but would have to hold above here. And the one key for this too, keep in mind, is going to be the DXY, right? If the DXY is holding above this mark, guys, then in my opinion, there's no euro long. All right. That's just my opinion. But really, if we're holding above here, there's no long on the euro with that being the case. And especially if we get back above 100. Okay. So just keep that in mind that there's still more work to do here. I'm not fully convinced by this just yet. And you can see that too when we look at the pound here, which is holding below this trend line, okay, off of these highs back here. So we've talked about this before. So far, no breakout from this market, although you can also see where it is starting to test this level more. Typically, when you get this from a market, right, this is a sign of a coming breakout. Just because we dropped down here, took out the lows, came right back to it, made a higher low down here, and now we're right back to the level. So it is starting to look a little bit more constructive here for the pound, a little more bullish for this market. Now, if you guys want to see exactly how I trade SMC full-time every single week, check out the link right here on the screen. So just below this video, that is a link to a free SMC strategy. It's a full course. Just click on the link, enter your name and email address. You will be given completely free access to that. All right. So if you don't see the link here, check out the description of this video. So right now for the pound coming into some resistance here with that trend line. So kind of similar to the DXY, right? Testing this support level down here. I'm not convinced by this just yet. I would have to see more from this market, right? I would have to see a close above here in order to expose higher levels. Okay. So one thing to watch here too, is we do still have some of an imbalance back here at these highs, although we did mitigate a lot of this on this high back here. So all in all, though, when you look at the price action here for the pound, the challenge here for this market, and I've said this for a while, is that going back here to really May, right? Even before that, this has just been a very sideways, very, very choppy market, right? We get these periods where the market just goes sideways. And right now we're basically trading at the same levels that we've been trading in all year long, right? You look at the open back here, 2026, the market is basically just been flat. Okay. So if you're a swing trader, the problem right now is that if you look at this range here, right? So if we just take this high up here and say, okay, range high for the year and the range lows for the year, notice where we're trading. We're trading right here in the middle, okay? And that's kind of the challenge right now for this market, is that if you're a swing trader, you want to trade the extremes, right? You want to trade this down here, right? Even this, but technically this up here and these down here. If you're trading right here in the middle, it's just way too easy to get chopped up in a market like this, especially with, again, we don't really have a confirmed breakout here, and the DXY still testing that key support level. Okay, so let's move along to the S&P 500. I want to show you guys this here. I'm not going to run through any technicals because really technically this market is just seeing a blue sky breakout right now. I did want to show you though this right here, which I find really, really interesting. So right now the S&P 500, right, we took out this range last week. We all know about this. This was just a crazy move here from this market, a crazy 4-day move up where we took out this entire range. Very, very aggressive. Now, the issue that I'm having with this move is that it's actually mimicking two fractals that we've seen in the past. Now, I want to be clear, guys, I'm not a big fan of fractals. A fractal is just basically looking at what happened before and matching it up to what's happening now to see if there are some similarities there. And right now, there are a lot of similarities with not only the 2021 top in December, but also the dot-com bubble, right? So this white line that you see here for the S&P, this was the December 2021 top. Okay, so if we go back here and look at this right back here. So right up here, this is the price action that I'm comparing this to. Now, what's interesting about this is that you can see we had this range that developed and we even had this higher low right here. Okay, then guess what? We had a 4-day advance. Okay, very aggressive advance above the highs. We then went sideways. Okay, and then what happened over the coming months? Right? Obviously that ended up being the top and we had a very aggressive pullback from this market. And so again, you have a range that developed, right? You have a very aggressive move above, a 4-day advance above. We went sideways for about a week and then that was the top. Now, I'm in no way saying that this is going to happen again. But when you look at this here, again, the white line here is that 2021 top. So this is 2021, this white line here, you can see we followed it exactly. Even this price action recently, what's really striking about this is that look at this here, right? So this was the low back there in 2021. That was the higher low. Guess what we had here? We had the low and then we had a higher low. So, I mean, it's been spot on with this market. Even this week, you can see where the market is basically going sideways, right where it went sideways back there at that peak. So I think this is going to be really interesting. I think what this is going to come down to for the S&P is that if next week we were to take out this high and just continue going higher, then I think this fractal is starting to break down, right? Now, if we go sideways next week for a few days, and then we start to drop below the range, then you've got to be careful because now we're starting to really mimic what happened back then even more. And that could produce a significant pullback. So again, guys, this isn't a call for the top. This isn't a forecast. This is just me pointing out a similarity that has been in place now for 18 months. And again, this past week, we saw the market stall out right where it did back there in 2021 as well. So just something to watch. Like I said, I think the confirmation for this is if we go sideways here for a few more days, and then all of a sudden we see the market drop out of this range, right? If we see that, then I think that becomes a little bit more concerning for the S&P and really for stocks in general. Okay, so let's move along now and talk about gold, which has been ripping higher last week. So this one here, what you'll notice is that if we go to a 12-month time frame, this is the yearly open. So the market is trading just above this yearly open mark. Okay, so if we go back here to a daily, you can see that this comes in right here at this level. So right around 43.30 or so. And right now we are trading above it. You can see where this capped this move back here. This was the FOMC right back here where we talked about this as resistance. At the time, there was even a change of character to get short here. But anyway, you can see where right now we are trading above this. So if we close the day and week above here, guys, it starts to look a little bit more bullish here for gold. Furthermore, too, you can see BOS back here. This is the protected high up there around 43.80. So really for me, I think what this is going to come down to is if we see gold, okay, close above here, then things start to look a little bit more constructive. Now, what you do have to be careful of is that you have this symmetry here off of these highs and these lows, right? To where this level comes in just above that, okay? So I do think you've got to be careful here. You've got the yearly open, you've got this protected high back here, you've got the top of that channel. So really for me, in order to see this market really truly break out, I would have to see it clear this entire area up here, okay? So when you look at that, this level comes in up there around like 44.20, 44.30. It would have to get above here, okay? We'd have to see something very convincing from gold to get above here and clear this whole area to target some of these highs back here, possibly this inefficiency, okay? So really, here's the thing. If you're looking at this in terms of if we get above here, I think we have a much larger breakout toward this high, possibly this inefficiency, in which case you're looking at 5K, right? So if you're getting in up here, right, around, let's say, 4,400, 4,500, right, you've still got $500 or more to play with. So I'm in no hurry to try to long this just because, again, you do have this confluence of resistance up here. We haven't technically gotten a change of character here on the daily, right? Because we are still midday here. So I'm not going to hurry into this, but I do think, again, we clear this area, we're probably looking at the move back there toward that 5K area. All right. Now, if we reject from here, right, and stay within this range, then really in terms of a change of character, in terms of structure, it's really just a range bound market. Okay. So I think that's the simplest way to explain gold right now, and not get too bullish into this resistance area. Okay. Now, looking at silver, right, we have a similar situation. So in this case here, you can see on the daily, we never really closed below this low back here. So technically this is all just sideways action. However, if you go to a 4-hour time frame, you can see where we have technically gotten a change of character. Okay. So this is just the difference between time frames, right? You're going to get a little bit more conviction behind the higher time frames. So in this case here, I would want to see the daily close above here, right? At a minimum. And again, I would want to see gold also clear this area because the two tend to move together anyway. So I'm not going to go long in silver if gold is still below here, right? That's the bottom line. So still more work to do, right? We are seeing the signs of a bottom here. Like if you were able to get long on a break of, something like this through here, which you can see right here on the 4-hour time frame, we did have a trend line, okay, off of these highs up here. So right through this area. So if you were to be able to get, long on this right here, right, the breakout from this range, and obviously that was a great trade, right? Really aggressive move up here so far. I think in terms of right now, in terms of a swing trade, longer term swing trade, I think there's just more work to do. I would want to see it take out this high. I would want to see gold get above this area up here around 4,400 to really clear this region and give me confidence that this trend has shifted. Okay, so that's it for silver, guys. I mean, still a range bound market for now. We are seeing signs of a bottom here, but I would like to see more from gold and silver in order to really confirm things. If we get above here though, then we're looking at this yearly open back here. And possibly, this massive inefficiency back here too. I mean, this is just a huge inefficiency up there around $80 to $85 for silver, to where if we start to put in a bottom down here, then levels like this up here, possibly this inefficiency would be fair game. For now though, guys, like I said, it's mostly just range bound, especially when you look at gold. All right, so WTI here, US oil. So this is one that if you guys saw videos, from weeks ago, we talked about this. So when this market was coming down here toward this 68 region, I mentioned this on the way down, right? And I said that this level down here at 66.7 was the level I was watching to mitigate this entire displacement we saw back here. And you can see we came within about 30 cents of that. So just a really, really nice trade if you guys caught that. Looking at the 1-hour time frame, there were multiple reasons to get in back here. First of all, you had the break above this descending channel, right? So really nice here. We had the breakout, right? Little pullback here, and then that was it. And you can also see too, where we did have a break of structure. And then over here, we had a change of character. And with that, you can see we got the higher low. Okay. So we pulled right back here into this inefficiency, mitigated this, and then we had that higher low form. I mean, you could have even, after this change of character, you could have even looked at it like this and done off of this high right here. Look at this breakout, right there. So that was your confirmation of this monster move that we got here from WTI. And it was all telegraphed, way back here before we even came down here into the 68 area. So anyway, guys, where are we going now? Well, you can see that we are still within this channel, right? So in my opinion, I think that this still looks pretty constructive for WTI. This is definitely not something that I'd be shorting, especially right now, because looking at the 4-hour time frame, what you'll notice is that we are pulling back in a way that could technically form a falling wedge, okay? Now, we're not there yet. I would like to see a rejection from this area, right? So possibly a rejection from here, pull back into this inefficiency, and just kind of get confirmation that this level is the one to watch. But I think if we start to do this, right, over the coming days and weeks and just really coil down here, then this could be something where we get another explosive move back here toward the highs. And with everything going on in Iran right now, and my lack of confidence in Trump, I will say that seems to be, in my opinion, the most likely scenario for WTI. So I would be looking for longs here, but again, I want to see this area. So right up here around 78.70, 79, I would want to see the market coming here to this area. Next week, reject from here to tell me that this is going to be the level to watch, get a rejection from here, back down here into this imbalance, and then possibly some more coiling before we get a breakout, okay? We could also obviously come down here and test this level down here. So retest this and then come down here and test this level down here somewhere as well, okay? To fully mitigate what we got back here, right? So you can see displacement back here. All we're doing right now, by the way, is look at this right here. So all we're doing right now, just like the market came back here at 68 to mitigate this move, okay, back here in, let's see, this was in March. So just like we came back here to mitigate this entire move, what WTI is doing right now is coming back here to mitigate inefficiencies like this, okay? So notice this right here. Now, there is still a bit of an inefficiency back here as well. So again, this is why I'm saying we could drop down here before we get a breakout. But all in all, I think this pullback is starting to look pretty constructive here from WTI. It probably needs a little bit more time here to kind of simmer and coil before we get a breakout. But so far, guys, this is looking, decently constructive here from WTI on this pullback. All right, so lastly, let's finish up here with Bitcoin BTC, which, look, guys, this market has been so sideways for the past 30 days, 30 plus days, really. I mean, ever since back here in June, we've just gone completely sideways, and really since this high back here on July 6th. So it's August 7th when I'm recording this, and the market is still sideways. I think from a daily perspective, what this is going to come down to, you can see where up here we had this failed break, right? Deviation above. You can see resistance back here, resistance, resistance, resistance again here on Friday. 65.4, right? 65,400. That's going to be key. I think if we get back above here on the daily, then you're looking at a sweep of this high back here. So right around 67, possibly a push up here into 69.70 into mid-August if we get the close above, right? Still a big if. Now, if we start to rotate lower, close above 64, then we're looking at a sweep of these lows back here. And the reason 64 matters is because looking at this on the daily chart, the key here is that notice what's happened all week. Even though this has been a very choppy move up, you can see that every single time, right, we didn't close below this low here, right? This was the next low. We obviously didn't close below that. This was the next low. This was the next low. We never closed below a low. And this is why I said on X, this past week, 64K was key. Because if we closed below 64K, for instance, on this low back here, if this candle had closed below here, that would have been the first close below a low, right? Look at this up here. We have this low now. Where are we bouncing? Right there from the low again today. So this would have to get taken out right around 64K in order to open up downside targets. There's really no short here, in my opinion, until that happens. And as far as longs, if we get above 65.4, like I said, close the day above here, then we're looking at a sweep of those highs around 67K, possibly into that confluence of resistance around 69.70K into mid-August. Now, as far as longer term, it's a bit of forecasting there. It always is. But, looking at, previous bear markets in this time frame, I still think my base case has been since the June close that this move up in August is just a relief rally, and we are likely to see a lower high form up here somewhere in August. And a lower high meaning, yes, it would be higher than these highs back here, but you look at the trend here that we've had now since October of 2025, it has been bearish. Okay, so you can also see where we have, the bottom of channels like this here that also come in there. And this is why this up here, 69.70K is a confluence of resistance to where I do think if we see up here, right, there's a good chance that becomes the high in August, right? Sweep the July highs, sweep this area up here, and then we get the market pushing lower in the second half or the fourth quarter of this year, okay? So that's what I'm looking at right now. I think short term, like I said, I think what this is going to come down to is 64K and 65,400. Close above here, we're looking at 67. Close below 64, we're looking at 62. All right, so that's it for today's video. Keep it locked in here. Subscribe to the channel. Also, check out that free SMC strategy right here on the screen. Click on that link, enter your name and email address, and you will be given completely free access. So enjoy the rest of your weekend. I will talk to you again on Monday.